The slow weight of legacy energy redevelopment and the accelerating momentum of digital infrastructure are today's signals, highlighting two very different forces shaping the CRE environment. Good morning. This is CRE360 Signal for today, Thursday, November 20th, 2025. The sale of the decommissioned 3 Mile Island nuclear facility shows how heavy legacy energy redevelopment has become. This was once an 800-megawatt anchor of the Mid-Atlantic grid. Now it's a case study in regulatory friction. NRC oversight, environmental remediation, decades-old liabilities, and zoning constraints each pull the project into a long-cycle timeline. Nuclear capacity nationwide is down roughly 5% since 2015. And while interest in repurposing these sites is rising, the actual path forward is slow and uncertain. The buyer's redevelopment strategy isn't public a sign that risk assessment is still happening behind the scenes, not in the market. Legacy energy doesn't move at the pace of demand, it moves at the pace of regulation. Meanwhile, a very different force is moving the digital infrastructure world. Meta's courtroom victory blocking the FTC's attempt to unwind its past acquisitions delivered a level of legal clarity big tech hasn't had in years. For CRE, this clarity matters. Hyperscalers plan on decade-long horizons, multi-billion-dollar data centers, fiber corridors, compute-aligned industrial footprints. They cannot build at scale when legal volatility is high. Following the ruling, leasing in top data center markets strengthened, absorption increased, and cap rates tightened again in prime hubs like Northern Virginia, Dallas, Phoenix, and Columbus. Legacy energy redevelopment and digital infrastructure expansion are not two halves of one story. They are parallel forces shaping different parts of CRE. One is slowed by regulatory friction, the other is accelerated by legal clarity and tenant demand. Operators who understand which systems run slow and which systems run fast will price risk correctly in the next cycle. Watch for increasing attempts to repurpose old energy sites, even if progress remains slow. Expect digital infrastructure markets to tighten further as legal clarity pulls capital into AI and cloud corridors. And track where underwriting begins to separate these categories, because they no longer behave the same. For full analysis on each signal, visit CRE360.ai.